So for long-term investors that are trying to navigate all the noise, all the different headlines, what's your best advice?
Ignore it.
As you know better than anyone, markets are driven by psychology as much as fundamentals. As you think about investing, is there a North Star when you look at individual companies, or how do you think about that through different market cycles?
I think the key is to buy low and sell high, and that's what everybody wants to do. But it's funny, in the stock market, everybody wants to buy high and sell low. And the reason for that is if the market's going up and you look at your statement and it's increasing, you feel pretty good about it. When it's going down, you think after 2 or 3, 4 months, I've just got to stop the pain here before I lose more. I had one client that said, well, when it's bad, I just don't open my statements. You have to realize that the market always goes back and sets new highs long term. And you shouldn't have money in the stock market if you can't leave it there for at least 5 years. And if you can, then you want to do what's uncomfortable. Put more money in when the market's low, and you certainly won't pick the bottom, but you'll get a good value. And when the market's high, if you have some aspiration to remodel your house or buy a boat or whatever, then take some money out that you think you might need in the next 1 to 3 years. But then leave the remainder in the market, because at the end of the day, no one can predict the market. But for the last 100 years, it's averaged about a 10% return, and it always goes back to the new highs.